All right. Hello. Welcome back to another Market Open. It is April 4th, 2023. We are here, and it is time to discuss the market. Doc Herring, what's up? John Lapp, Johnny, Cameron, Ahad, Philip, Geis, Jem, thank you all for being here. You guys don't seem to be fans of Jamie Dimon. He has made some headlines this morning because he says that, look, the banking crisis that we had, that's not done. The idea that that's done is ridiculous. That banking crisis is here to stay, and it's actually going to get pretty bad. So I want to pull up his quotes right now, and so we can take a look at kind of why he feels this way and what exactly he thinks is going on with the markets, especially with the banking crisis. Now, I know a lot of us think that the banking crisis is over, just in the context of we're not thinking about it, on the day-to-day. It's like it's done. We can move on. Jamie Dimon is the CEO of, one of the biggest banks in the world, which is JP Morgan. That probably got a lot of business from the banking crisis, so he might have some incentives to also be talking about why the banking crisis is happening. But nonetheless, that's why he's here. Ramu, good morning. Grown plays here for the bell. Investing Solace, what's up? Kaiser, Amroso, Neo, Bay, Ray, Practical Investing, Everclear, good morning. Happy Tuesday. Ray, Felicia, Jason Reynolds, Dex. How are the teeth? The teeth were a little tough this morning, but, we're getting there. April 12th. We have that root canal, so hopefully that would help everything. Vitaly, I have an online software degree and can tell you that Palantir is a terrible software. That was the funniest part of last night on our Finance Junkies podcast. Vitaly's like, I have a master's in computer science. And we were like, oh, so that's why you don't like Palantir? It was really funny. It was great. Last night was a good episode. Remember, 10 p.m. live every night. We'll be live again tonight on Finance Junkies. All right, Jamie Dimon, longtime JP Morgan Chase CEO, said of the latest financial shock in his annual letter, the current crisis is not yet over, and when it is behind us, there will be repercussions from it for years to come. Now, he's either talking about the precedent it sets for banks, what the FDIC is doing, the printing we had to do to save these banks, which is basically, we save them. And that goes back to Balaji's point, who thinks that Bitcoin can get to $1 million because of hyperinflation, because of all the printing we did. Something he thinks is going to happen. But importantly, recent events are nothing like what occurred during the 2008 financial crisis, so that's a little bullish. The recent banking crisis issues in the U.S. began with the collapse of Silicon Valley Bank. So he still feels like it's going to pretty be bad. As I write this letter, the current crisis is not yet over, and even when it is behind us, there will be repercussions. He says the stress on the regional banks have led investors and analysts to suggest that the too big to fail banks will be a beneficiary of the crisis, but Dimon said JP Morgan wants to strengthen the smaller banks for the benefit of the whole financial system. I kind of believe him when he says this, but I believe him to an extent. Like, yes, keep the banks alive, but it's not like he doesn't want his bank to not be strengthened from everything going on. This is not to absolve bank management. It's just to make clear that this wasn't the finest hour for many players. All of these colliding factors became critically important when the marketplace, rating agencies, and depositors focused on them. He said that regulation should be less academic and more collaborative, and policymakers should be wary of potential pushing from some financial services to non-banks and so-called shadow banks. It's really interesting. The bank stock fell 15% during the calendar year, but it generated more than $37 billion in net income. That's phenomenal. So 2022, JP Morgan made $37 billion in profits, but they lost 15% of their market value, which, it was a hard year for a lot of companies. So I don't know what the political motivations are for putting out that the banking crisis will have ramifications for years to come. He doesn't really make specific what those ramifications are or why they would happen now that some of these regional banks are getting better. But I think I do believe in that when he says he wants to save the regional banking structure of America. Finland joined NATO. Is it bad that I didn't know that Finland was already not a part of NATO? Is that just me? That I was like, oh, Finland. Like if you asked me yesterday, is Finland part of NATO? I've been like, yeah, sure. Why not? So I guess that's news. Finland has now joined NATO. There's obviously some geopolitical ramifications there. Finland's PM also lost. I know that the girl who was running lost to somebody. I don't know who she lost to, but she lost. She conceded defeat. Prior to Tuesday, Russia shared about a 755 miles of land border with 5 NATO members. Finland's accession more than doubles NATO's land border with Russia. So here's like a little picture to kind of highlight and show this as well. This is interesting. So there's Finland right there. So Russia shared land with Estonia, Latvia, Poland, Romania, and now Finland. So all of these companies. I'm so capitalist, bro. All of these countries, as you can see, they're joined, right? So Russia has to share land with them. Finland was not joined. Now they are joined. So Russia shares land with them as well. And Sweden has an application pending to join. The only one that cannot join is Ukraine, because Russia would like literally go World War VII if that happened. But you know, it is interesting now that Russia has to share land with all these other different countries. Does that have any effects on the markets? I mean, yes, but like I don't know if there's any real immediate effects from that happening, to be honest. Oh, you're on the turnpike, Johnny? That's awesome. Hope you're enjoying the turnpike. I was on the turnpike all weekend because I went to New York. Okay, let's take a look at Webull. Let's get into some stocks and see what's going on as well. And get a broader look of what's going on in the markets. By the way, do you guys like this jacket? I got this in 7th grade and I found it in my closet yesterday. And I was like, yo, this thing is like legit. Like, it's a really dope jacket. All right. It's just pulling up right now. There we go. Yeah, we got the Trump stuff tonight. I mean, that's gonna be must-see TV, right? The Trump getting indicted. That's gonna be crazy, bro. I guess we'll see what happens when that happens. Tesla 197 up 1%. Occidental up 1%. Nvidia down just a little bit. Datadog down. Google's down. SoFi is up 608, just a little bit. Microsoft is down. Let's go to the S&P. I didn't even see the S&P yesterday. I actually have no idea where the S&P is or how it ended. S&P, I'd say 402. Oh, never mind. 410. Okay. So we're at 411 on the S&P now. NASDAQ also down just a little bit, but still in the 12,000 range. Snowflake at 150. Let's go to Palantir. I think it's at the 840s still, 830s, 838s, 846 pre-market. Okay. Enphase had a nice run up yesterday, but then it just collapsed back down to 202. So it was at 216, right down to 202. Meta's up at 213. We've got Amazon at 102, Apple 166, Netflix 348. Are these prices to buy at? I don't know. Definitely, maybe a little bit of DCAing here. SLG at 23.94. Buying, I don't know. I don't know if you want to heavily load up on these. FRC at 1460. Again, I think we talked about yesterday that there's not that many negative catalysts that are left to really bring the market down to those 3,000 levels that people on Wall Street were expecting. Like I can't think of the catalyst. I mean, I genuinely can't think of the catalyst, especially if inflation goes down. The Fed has to start. If the Fed pauses and inflation goes down, what are the catalysts? Tesla, they're down because their expectations were slightly beaten on deliveries, but Tesla's not at $100 like it was in January. It doesn't seem that there's anything super crazy going on that would cause a massive decline. Amit, do you have a limit on how many years you will hold Palantir in red while versus when you write off your losses? No, I kind of just look, I'm holding it, right? And the problem with writing it off is you're only allowed to take out a $3,000 loss per year from the loss. And then, what if it runs up? And then, so it's kind of just like, it's one of those stocks that, I don't know, I'll give it some time, especially 2023. I'm not planning to sell. I don't feel like selling. Kind of want to see what management does. Kind of want to see if they're sandbagging growth. And we'll see from there. And then 2024, maybe reevaluate. Maybe then it's time to take a loss and just rebuy in after like a wash show. Okay. April 4th, 2023, 9:30 a.m. Thank you all for being here. The market is now open. Wake your ass up. The stock market's open. Look at that. Palantir, 852, up 1.67%. S&P, 411. Nvidia, 279. Tesla, 197, up 1.14%. Occidental, 65.76, up 0.89%. Super Micro, that's doing nicely. Up 237. It was 106 the other day. Now it's at 115. First Republic, 1428. SoFi, 607. SoFi was I think at like 614 yesterday, so now 607, not bad. Enphase at 201, so Enphase is down. Meta 213, Amazon 102, ARK 39.92. ARK not getting past that $40 range, but ARK stuck there. 28,280 on Bitcoin, also not getting past the $29,000 range. And look at Square. Big FU to Hindenburg, 68.95, market cap of 41 billion, barely down from when the short report came out. The short report has no legs on it. It will be very interesting to see Square have to, or Hindenburg have to close that short report and take a loss, or at least a very small gain, because they've gotten the past couple of them right, especially Adani Group. And now that, it's like you want to keep the record going, but if you get one of them wrong, people stop trusting if you're actually good at shorting stocks. Apple at 166, NASDAQ 12,207, up 17 points at the open. Snowflake 152. Rocket Lab, I did an entire podcast about this last night that'll be coming out in the next couple of days. Look, I like it. It seems very interesting. Risk reward seems really interesting as well. At a $2 billion market cap, also seems very interesting. But is it worth $1,000 to just start a position? In my opinion, yes, after I had that podcast yesterday, but I want to do a little bit more due diligence just to understand it. The sort of core thesis I understood about them is that there's really not that many people being able to launch as many rockets as they're doing, being able to clean up as much of the debris in space that they're doing, and being able to build a lot of the end-to-end space systems that are required for rockets to not only be in space, but for internet to be deployed, etc. SpaceX is the elephant in the room, but SpaceX can't do everything. They're valued at 160 billion, Rocket Lab's at 2 billion. To argue Rocket Labs could get 1/5 of SpaceX's market cap in the next 10 years, and that would be a 5x from here, is pretty reasonable if you look at some of the numbers as well. So Rocket Labs is an interesting one, and we'll take a look at that a little bit more deeper on the channel over the next couple of weeks. Spotify at 135.76, Robinhood 970. Again, Robinhood $6 billion in cash. I love this company so much. I just hate their user metrics and growth. And so again, everything has been declining for them for the past 4 quarters. So I'm really curious to see their earnings and see what turns out from there. AMC at 440, Ethereum at 1874, Triple QQ at 28, DNA, Ginkgo Bioworks 127. They have some new announcement today that I'll look at. It's some new partnership that they're doing with some cell company. Stock market doesn't care. Intel at 33, Schwab dividend equity ETF at 73, Uber 32. And that's pretty much it. Roku 67, Zoom 73 as well. A pretty boring day. Nothing too high, nothing too low. But it is green overall. That's what we're looking like. Have you looked into UiPath? Yeah, UiPath, basically robotics on steroids for software. I liked it. I do think the dilution is a little bit, annoying, but it's a good one. I haven't initiated a position yet because I haven't gone super deep on them, but it is definitely a good one for sure. Square should release a rap song to troll it. Oh man, that'd be so funny. That'd be like, just pay a rapper, give them like $100,000 and tell them to name drop Hindenburg. That'd be hilarious. Emmett Peppers is a big Tesla and Rocket Lab. Well, really, I didn't know he was into Rocket Lab. I knew he was into Tesla. Did not know he was into Rocket Lab. Yeah, I mean, look, I stayed up to like 12:30 last night doing some research on it, and it's interesting to say the least. It's very interesting. The CEO is also like, he seems like a guy you want to bet on, kind of like an Elon figure. He's been into rockets since he was a little kid, built this company. He's a founder CEO, which I really like. And then, the person I was talking to has it as their largest position, and they were kind of breaking it down in as non-biased of a way as possible. What really is the space race? What China's doing? Why we have to be competitive? And why it's similar to AI. It's not going to grow as much as AI is growing, but it's similar in the context of the TAM itself is growing. And if the TAM is growing, the opportunity for companies to be able to just land so many deals and be part of that growing TAM is exciting. And so that's interesting as well. Why do you oil your boys hate carp? I think it's just their personality at that point. They just hate carp. So David just showed something really cool. There's a Wired article that came out about Palantir. So let me just share it right now. So it's Palantir's plan to decipher the mysteries of long COVID. So this is Dr. Indra Joshi. They are the head of research and AI. They're the director of health of research and AI at Palantir, and I believe they used to work at the NHS. So Palantir scooped them up from the NHS. She used to be the head of AI at NHS, and that's, we probably scooped her up to get some of this deal. But basically, this is a video, and I'll put the video in the chat. She's talking about how we can use health and data to actually deal with COVID. It's a 15-minute video. I haven't watched it yet, but I do recommend people check it out. It seems pretty cool. It seems like it's worth doing a reaction to and understanding it a little bit more as well. Real friends, don't let them hate on Cart. Man, I tried. Did you see my debate that I did with them on YouTube? I literally tried. I was just like, you guys just can't say he's a bad person. That's you look stupid saying. And then they're like, nope, he sucks. I'm like, all right, I can't do anything over that. That is out of my control at that point. But I just don't think they get Palantir's tech as much, and they're upset at the stock price, which I understand. The problem is, you can't be emotional when it comes to this. You either believe in the tech, you believe in the company, and you keep moving on. If not, then you go from there. All right, I don't know if you've heard in the news, but McDonald's is laying off employees, which I don't think any of us expected in 2023, but it's happening. Let's take a look at why that's happening.
Join us right now to discuss the fired from home trend. Jessica Kriegel, Chief Scientist of Workplace Culture Partners. Good morning to you. We've seen this now repeatedly, including, I think, probably most famously at Twitter, Jessica, but now you have a company like McDonald's doing it. There's some people who say, obviously, that this is a terribly undignified way to fire people, that it creates an abstraction in terms of the relationship that an employee has with the company. However, I heard from some people yesterday who said actually that this is more dignified, that the idea of having to walk out of an office holding a box in front of all your other colleagues, that is worse. What do you think?
It's absolutely more dignified now that working from home is normalized. We work from home. That means all of the business of work, collaboration, innovation, and also getting laid off. Frankly, I think McDonald's is teaching a masterclass in layoffs. They broadcasted back in January that they were coming. People were able to prepare. Now April has come and they're letting people know in the comfort of their own home. They're able to maintain confidentiality. They don't have to walk their stuff out down the hallway and be escorted out. If I were getting laid off, I'd want to be laid off at home, not at the office.
So, but what do you make of, I mean, I would say the majority, I don't want to speak for the majority or the minority, but there's a lot of people out there that say they're on the undignified side of this. They say, no. This totally undoes the relationship that a company has with an employee. It's no longer personal at all. The idea that, they're going to ship your stuff home, if they ship it at home at all, changes even your own psyche about, whether you're even going to be allowed into the office the next day on any given day, whether your key card really is going to work or not. And that changes both also long-term, the sort of loyalty that employees may or may not have to companies.
Listen, culture is not about being at the office and around the water cooler. It's not about the way that we interact at headquarters around the ping pong table. It's about the experiences we have. And those experiences lead to beliefs. And those experiences can happen on a Zoom call. They can happen in a text message. They happen on the phone just as much as they happen in person. And so I've laid people off before, and it's incredibly emotional. When I lay people off, they get angry. They get sad. It's really difficult, both for the person being laid off and the person who is doing the laying off. And so in those moments, do you want to, as soon as you hear that news, have to go walk outside, deal with the people who are staring at you, pack up your stuff, walk down the hallway? Or do you want to hang up and go cry in your room and go talk to your family and have space to grieve and deal with whatever emotions it is that you're having? Now that we're working in a virtual environment, that idea that we have to be in person is an old school mentality. It's just not the case anymore.
I actually find that your argument quite persuasive. I'm curious, though, I imagine you've gotten feedback from others who say, Jessica, come on.
Yeah. And I say, what? Experiences happen at a virtual level. Those experiences lead to beliefs. The belief that I would hold if I got laid off at home is McDonald's cared about me. They wanted me to feel comfortable. They wanted me to maintain my confidentiality. They didn't want me to do that walk of shame. That's going to lead me to take an action, which is going to be able to allow me to have whatever experience I need to work through that. And that's going to get a result, which is I'm going to feel a little bit better about the experience.
Bro, I don't know what she was saying. When you get fired, no one takes that well, bro. No one wants to fucking No one wants to be like, oh, well, this is a stepping stone. It's like, no, bro, you just took away my job. Like, and I'm curious how many of those McDonald workers are white collar versus blue collar, because I thought a lot of them were in the actual restaurant. Look, McDonald's doesn't care about workers. None of these corporations care about workers. Okay. It's just, they only care about how economically viable you are. Facebook, you think Facebook cares about their workers because they give them like these beautiful campuses and pools and massages. No, their workers, like their software developers, project managers, whatever, are incredibly valuable to the company. They produce actual ROI for Facebook, which is why Facebook keeps them and gives them all these perks. McDonald's, I mean, McDonald's, if you're firing someone who's working at the cashier, you don't care about them, which is why you haven't increased their minimum wage. And you also just want them, you've been automating the crap out of their job over I remember being in Germany 5 years ago and seeing McDonald's literally just like, not have cashiers because they don't need them. It's like, look, they just care about what's economically viable. That's it. And as long as it's economically profitable to have workers, they'll have them. If not, they won't. They're good for not firing them, but better just do it at home. I mean, maybe, bro. I think like if you get fired regardless, it's gonna suck. But yeah, it is at least it is funny that you're at home and you get the email versus at work and you have to do a walk of shame. Who knows though? Maybe that walk of shame is actually good for character building. I feel like I've done many walks of shames before in my life. I don't know. Regardless, the bigger news is that McDonald's is actually doing layoffs. And I think Starbucks also was doing some layoffs. The stock market has not really given it any, but I haven't looked at McDonald's in a while. Let's look at the 5-year on it. So McDonald's had 115 during COVID. Since then has gone up pretty nicely now to 282. It hit 222 in March 2022. And on the October lows hit 232. So McDonald's has been relatively stable. Market cap of 200 billion. It was $70 back in 2015. So it's done a bit of a 4x since then, which is not bad. I mean, 4x for McDonald's, it's not supposed to be growing massively, but it's growing decently. Is not the worst in the world. I've never thought of owning McDonald's because I'm like, when there's so many other options, why would I buy McDonald's? They have a dividend yield of 2.16%, so that might be one of the reasons to be excited about them. But if they are getting more operationally efficient and lean, the one person that likes that is Jay Powell, because that means less jobs into the sector. The older you get, the walk of the shame kind of isn't there anymore. You just don't give. Yeah, that's fair as well. That is fair. McDonald's makes their money with from store real estate with app ordering and ghost chickens. They don't need as many stores. That's true. And I mean, they just don't need that many employees to manage those stores as well. They've always been a real estate company. I mean, we've always known that. McDonald's in Europe is on another level. Yeah, I've seen some of the advertising for McDonald's in Europe, and it's very interesting. It's interesting. They're only laying off in headquarters. It is not a lot of franchises. Okay, that makes sense. Good to be your own boss. Yeah, man, it's fun to kind of control your own destiny and stuff and be your own. But put in the chat if you are an entrepreneur. I want to know. Put in the chat, or if you have any side hustles that are entrepreneurial. I would love to know if anyone's like full-time entrepreneur versus side hustles that are entrepreneurial. Basically, when I graduated college, I had a consulting business. So I was a quote unquote entrepreneur, but that consulting business made me work 40 hours a week for a client. So it was entrepreneurial, but it was client-based work. So it kind of felt like a job, but I've never actually had like a 401k, a W-2 set. Like I've never gotten a W-2. I've always been a 1099 because I always have my own business. So I've kind of always been entrepreneuring it out since really 19. But I always think sometimes what would have been like if I worked for a big tech company or something, or like worked at Google and stuff. And whenever I think of that, I'm like, yo, that's a cool idea. But then I'm just like, but then you're just stuck in the office with a bunch of other people and you're waiting till it's fine. You're never building anything for your own. And again, there's nothing bad about that. But for me, I just always like wanted to, I don't know. I think it's my dad, but my dad's been an entrepreneur his whole life. My dad has literally never worked for someone ever since he was like 15. And I think that entrepreneurial bug rubbed in on me. I'm not like my dad in a lot of ways. I'm more like my mom from a creative perspective. My dad's entrepreneurship stuff, I think it just rubbed off on me somehow. And that's why I've just literally always just, had my own business. Amazon FBA and options trading as a side hustle, full-time job, and 3 kids. That's legit, bro. Fucking love that. I love that shit. I tried FBA before. It's a hard thing. So if you're doing FBA, like, congrats to you. I've tried. I think I was like 19 years old in college trying to learn about FBA. It's difficult. There's definitely a growth curve it takes to learn that stuff. So not bad at all. Side gig doing video. Yes. Okay, cool, Blake. I didn't know you were doing videography. That's dope. Now I hate the corporate world. After college, I thought it was cool. Not anymore. Yeah. Sometimes I think, man, corporate would have been fun, but I'm just like, I don't know, man. You got to deal with corporate. You got to be super corporate. It's like so today I have a meeting today with someone very important, and Gabe just shorted Lulu as I say this. Let's go to Lulu so we can. Gabe, what's your short thesis? Put it in the chat. I have a meeting today with someone really important, and that meeting, if it goes well, can do a lot of interesting things in my life, and so that's a really cool, like, it's a thing about being an entrepreneur. It's like there's one moment that could change the trajectory of everything. And you don't really get that sometimes when you're working in corporate. It's just the same kind of routine. You go in, you clock in your hours, all that stuff. You don't really have autonomy to change that much of the organization. But as an entrepreneur, it's like, it's really everything's in your hands and you just figure shit out. And you never give up. It's not for the faint of heart, though. It's not for the faint of heart, because at one point you're going to want to fucking give up and just stop. But if you just keep going, and you have some resilience, it might, things might actually happen. Lulu's 368. Now, Lulu's earnings, we talked about this a while ago. Market cap of 46 billion. They have a brand that is starting to approach Nike when it comes in the gym. I mean, Lululemon is everywhere. If the consumer is spending on Lulu, the argument against the short report or just shorting it, is that the brand is strong and resilience will maintain through up until the next quarter. And if you looked at last quarter's earnings, you kind of don't have a reason to not believe that. It's technically overbought and left a huge gap below. Okay, so you're shorting on the technicals. That's fair. That's fair, because the actual company itself, I mean, when I went through the earnings and I looked at a little bit of the brand significance, because I didn't even realize why Lulu popped. I was confused. Like, it's Lululemon. But then I looked and it was like, oh, people are actually really loyal to Lulu. It's one of those brands that, like, I'm assuming they've got SEO unlocked. They've got Facebook ads unlocked. When people look to buy gym clothes, they pop up. I mean, let's do a search for that real quick. I'm going to search just gym clothes, and see what happens on Google. Okay, gym clothes. What do I get? I get Under Armour, Nike, Amazon. Why does Google have this weird thing? Look at what Google's doing. This is so weird. I've never seen this before. Leggings. Yes, leggings as well. Look at this. Look at this. Have you seen this before? Filter by? I've never seen this before. Look at this. This is like Amazon stuff, right? This is like an Amazon type of. Have you guys seen this before? This is literally like an Amazon filter thing on the side. Where they have Prime and under 70, all that stuff. Okay, let me type in gym clothes leggings. We get Amazon, Boti, Gymshark. And then, so Lulu is being sold on some of these websites, but Lulu's website didn't pop yet. Yep. Interesting. Yeah, this filter thing, this is look at this brand right here. There, so Lululemon's at the top right there. I wonder if Google's ever going to say, hey, if you want to be in this little brand section, you got to pay us. Because if I could filter to brand and brand's right at the top, your brand's at the top, you can imagine that. Interesting. I used DuckDuckGo and I got Gymshark, Gumtree, and Nike. Huh. Okay. You got $25K a month from a cowbell meeting. You guys know that was a joke, right, John? That $25K a month is not real. That's just a joke I played on the crew, and they were pretty sad when they realized it was a joke. But is this safe for work? Amit, do you know why Chris brought Green Reality Corp? What does he see in that? Yeah, so we did a podcast, I think like 3 days ago on SLG. He bought $500,000 worth of it at $20. So the overall bull case, $1 billion market cap, 12 billion in net assets, 4.5 billion in long-term debt, and one of only 2 commercial real estate operators in New York that really have a stranglehold over New York markets. It's already down 70% from the COVID pandemic problems, and it owns places like 1 Madison Avenue. So he sees it as just a company that has a lot of free cash flow, that work from home is starting to come back into the office at like an accelerating rate. And we see every CEO basically saying we want people in the office. And if that's the case, they're just going to start selling a lot of leases on real estate or on commercial real estate in New York. So it's a play that he thinks is just massively undervalued by about 70%. And, so far he has been right on that. What are you using ChatGPT for? I assume you write scripts and do research. I plan to buy the paid version. Yeah, copywriting is the big thing for me with ChatGPT, and just like asking ChatGPT to do things that I needed to do and get answers very quickly. It's been helping a lot. So I really, 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 really like it. And so, yeah, the $20 a month is nothing compared to how productive. It's one of the things where $20 a month is a lot, but I feel happy paying the $20 a month because when I'm using it, I'm like, oh shit, I'm getting so much value from this. So that's what I like about it. Okay. You should have admitted your bricks aren't real for April Fools. I wanted to make an April Fools video, but I was actually in New York. I was doing some work for a client. And so I literally couldn't make a video that day. I was actually kind of annoyed because I was like, I really want to make but I literally just couldn't make the video. But the bricks are real. So as you can see, when I tap on the bricks are real. And that's the case. Are there people talking about stocks on a date? I think I've talked about stocks on a date before. Well, I think so. The girl was asking, what are some ESG stocks? She's like an environmentally friendly. She's like, what are some of those stocks to invest in? I was like, oh, Tesla. And she's like, yeah, but Elon Musk. And as soon as she said that, I was like, oh boy. I was like, I tried to argue it a little bit. I was like, yeah, but don't you think? She's like, yeah, but Elon. I was like, yeah, you're right. You should go invest in Beyond Meat because that's way better than Tesla. That's just so much. She's like, oh yeah, I've been thinking about Beyond Meat. And I was like, of course you've been thinking about Beyond Meat. It's something. So girls don't like Elon for some reason, bro. And I'm like, I get it, but I'm also like, it's Elon. Like he's doing some dope shit. Like he's taking over the world. I would argue he's taking over the world. All right, let's take a look at this 2-minute video. Tech looks expensive. Chris was even saying this last night. He was saying some of these tech stocks are coming back into their valuations and they're starting to feel a bit more mature. They're not as undervalued as they were a couple of months ago. I've been using Bard and the results have improved considerably in recent days. Give it a go. Yeah, I still have to apply for it. I think Google's opening it now to a lot more people, so I'm going to check it as well and we'll see it. Okay. Here we go.
New quarter.
Yep.
Same story for the market.
Well, last quarter was certainly led by tech. I mean, it was massive outperformance. And if we look at the spread of performance between tech and energy, it was nearly 40%. And so what we see now is tech is extremely expensive and energy prior to today is extremely cheap.
Why do you say extremely expensive?
Well, it was trading at a 40% premium to the market, which is even higher than it reached back in 2021 at the peak of the pandemic bubble. So that premium is huge and is already pricing in, we think, a lot of potential easing in the Fed or by the Fed.
Oh, is that what you think has led to the run in tech?
I think it's twofold. I think there is a factor of pricing in easier Fed policy reflected by lower interest rates. We did see real interest rates fall through the beginning of the year. And then, of course, there is that flight to safety, which tech has had good performance during past recessions from an earnings standpoint. Mm-hmm. So when you put the two of those things together, you get this big, huge surge in tech. Flight
to cash flow, right? I mean, mm-hmm. if you're looking, yeah. if you're going to be, scrutinizing balance sheets more. Mm-hmm. Why wouldn't you go there? If you need growth in a low growth environment, why wouldn't you go there?
The only reason why you would be cautious today is because of valuation. Valuation can be a risk in and of itself. Now, there has to be a catalyst. In 2022, valuation was a big risk for tech. Tech earnings weren't bad last year, but the valuation started the year so high. So that's where you have to be very cautious that quality at any price doesn't work.
So would you be a fader of there's the XLK, mm-hmm. right? We could show it again. We're looking at it on the screen. That's the tech sector ETF. It's up better than 20%. There it is, 21% year to date, reflecting the move we've seen, which, by the way, you can really boil down to essentially 5 stocks, mm-hmm. give or take a couple.
Exactly. I mean, the market's been extremely top heavy. And so if you do remove those stocks, you do see a market that's trading at less extended of a multiple. But even the equal weight S&P 500 is trading at about 16.5 times. That's near the prior high in the
That's interesting. So the equal weight on the S&P is trading 16 and a half times, which is near the prior high of the S&P. You see 3,700 on the downside, 4,100 on the upside, and that is nowhere to the 32 or 3,000 level that analysts were saying about a month ago.
Pandemic ranges. So it's not as stretched as tech is, but it certainly speaks to that this big rally that we've had year to date has all been multiple expansion.
She's right on that. She's right on that. It's all been multiple expansion, and S&P now trade. If it's the biggest tech stocks are trading at way more than 16 times earnings, like the S&P, and so I think that's why it is a little cautious now, because Facebook's not at $88 anymore. Google's not at 85. Amazon's not at 91. So there may be a bit retracement backwards, or it can just keep on going. But I think earnings will determine everything. I mean, and last tech earnings weren't that good for a lot of these tech companies. Facebook's was good. Google's was Amazon was Amazon really had zero growth, and they had zero growth really in retail. They grew a little bit in AWS. Their advertising grew the most, but it wasn't like some stellar, amazing quarter. But it wasn't bad enough for the market to justify slashing it really badly. Same thing with Microsoft. So if they perform really nicely in Q1 2023, these multiple expansions might keep expanding, but we will see. Amid what pockets you talk about SLG? I don't remember which one. I think it was I think it was either Tuesday or Wednesday. I gotta check, bro. I'm sorry. I really don't remember which one. If you go to the live section on my channel, I'm pretty sure it was last week, either Monday, Tuesday. It definitely wasn't Thursday or Friday. So it's one of those two. And I think we start talking about it within like 10 minutes. So if you just scrub through it a little bit, you'll start hearing some of that stuff. But it's in one of those. I'll try to look as well and check, and then I'll put a link in today's episode of the SLG episode if I can find it. Okay, that's it for me. That's it. Thank you all. I appreciate it. 237 people here means a lot to me. Interesting market that we have. Let's do one last quick check of where we are at. It seems like things are, look at that. We got pretty green. S&P at 410, Nvidia down a little bit, Palantir is up, McDonald's up, Lulu's up, Tesla down just a little bit at 194, Google's up at 105, Meta 214, Amazon 102, ARK 39. Some are down, some are up. Coinbase, NASDAQ 12,188, Square 69, Coinbase 63. So kind of flat. Some are down, some are up. Nothing too crazy. But overall S&P at 411. And we're going to see, I think the next catalyst is 420. Can we break 420 on the S&P on April 20th? That would be amazing. What day is April 20th? April 20th is a Thursday. Okay. So it'd be interesting to see if we can have it from there. All right. Have a great day, everyone. Have you already researched Rocket Lab? Yes, I did a podcast about it yesterday, and that'll be out in a couple days. So Rocket Lab 1 will be out. Have a great day, everybody. Join the Discord. Pinned link in the description or in the chat, Twitter in the description. Thank you all for being here. And we'll see you tonight, 10 p.m. on Finance Junkies. Have a great day, everyone. Bye-bye.